Thursday, October 3rd, Stan Ehrlich, market analysis. Here we go. Looks like this market may have turned a corner on Tuesday of this week with a bearish ER sell signal in both the E-mini and the NASDAQ NQ futures. We're about to make, it looks like, new lows for the move down below the signal day's low, which already happened yesterday, although the close is relatively steady. Today, the market tried to accelerate upward a little bit, and, very minor amount, but we are now low and last, or very close to it in the last few minutes, and very close to the low of yesterday also. I think it's going to break yesterday's low, stay below yesterday's low, and close down fairly significantly today for what could be some sort of a confirmation to the signal on Tuesday, which would be great for me. I like to have those signals at or very, very close to tops, high days. So here's our short-term 5-minute now. I'm going to use 5-minute charts, and I've squished it as much as I can to the right so I can see as many days, which is usually 2 or 3 weeks, of 5-minute data to show you the details. Just a few minutes ago, we slam dunked to a minor new low for the day, but not quite below yesterday's low, very close. I'm expecting that to happen maybe while we're still doing this YouTube. The minimum downside objective, as I've been talking about now for probably too long, is down to the lows that we made earlier in the month. And I have a little problem there. And that would be the first week or so of September, last month. And below that, I would not be surprised sometime this month, October lows, which again have happened approximately 2% of the time since 1993. Only 3 times has there not been an obvious usable low in October, and just kept trending lower right away in November. I'm going to have to fix that problem now. Back to the 5-minute, and let's go to the SPY, and we're approaching those lows just like the EM, and the 1-minute chart is the same situation. You can see if we make lows lower than yesterday in these SPY and ES indexes, the S&P 500 indexes, we will be knocking away another couple of days worth of previous lows and approaching one more support area that probably is a pretty darn good one, and that's because most of the activity that happened around August 20, I'll give it 19, through September 3rd, couple 3 weeks, is in a specific range. That's support because we're trading above it. So we might just get, I doubt oversold. No, we're not nowhere near it at 47. A bounce. That's about it off of that support area. We might not. So I'm going to have to watch very carefully as it approaches the level of about 563 for the SPY. Next chart. QQQ. Pretty much the same thing, but I do want to point out that we have a higher high today than yesterday. And if we do get below yesterday's low, the QQQ, because it was overbought within the allotted number of past days I looked for overbought conditions in the past, it will turn red. And I think we're going to see it. Not necessarily while I'm doing the YouTube. But that also will make a low lower than the low of the week, which is pretty much at the same time, will make a new low also for about 2 weeks, as it did a couple of days ago. So on the way down, in my opinion, next stopping point for the potential highest level for my October lows is 449. And then I cannot rule out something in the 434 ballpark, a little higher, maybe 449 to 440, 434, which is quite a big range. But yeah, that's about it. First objective, let's say a hair below 450, easy number to remember. And the next one down in the ballpark of 434. Okay. On the way down sharply in the QQQ. Doesn't have too far to go to make those lower lows for a couple of weeks. Now, Today we got a little bit higher than yesterday's high in the NQ, NASDAQ futures. We are relatively close to the low of the day. I think the same thing is about to happen in the NQ as the ES, and that is get below yesterday's low and the low of the signal day, which was just Tuesday, and nothing is going wrong here. I am sorry to say we didn't get quite high enough. Well, no, that's wrong. Yesterday we did get high enough to reach ER3's new short sell signal trigger price, which happens to be relatively close to yesterday's high, and I'll show you in a moment. Pretty good. And closed with a little profit yesterday for a scalp profit, but the overnight ER3 version is still short. You can see the little green line. You'll see it in the 10-year notes in a moment. Same trade, same philosophy, same technique, etc. The notes are doing great. Okay. This is the 5-minute chart on the NQ. Heading south, Tierra del Fuego, land of fire, nickname for the southern tip of South America. What was it, Magellan or something? He saw what looked like volcanic fires on the edge of the southern continent, southern tip of South America. It turns out it was native people's bonfires on the beach. Anyway, watch out. Coming down. There's your green trade line. Yesterday's high. Let's zoom in here, so to speak. And there's the rally yesterday at 8:15 California time, a couple hours after the opening or so. And it popped up just enough, plus a little bit more, to catch this red line, which is the new short sale signal trigger line for ER3. You could have got in at the same price later in the day, close to the close, but we got in when it happened on the first occasion. Stops coming down very, very fast, and the day trade scalp did not get stopped out. It got pushed out because of the close coming in within 2 minutes. Made a very small profit. Too bad we didn't make more with the default inputs. You can, and I don't encourage it, change the speed at which the STS smart trailing stop moves and locked in more profit easily. But I left it at the default. Go away. So we're short ER3 overnight right there. ER1 overnight made a small profit, got stopped out late yesterday. Reshorted it on the rally. In effect, saving ourselves the difference and spent a commission. So here we are. Made new lows just a few minutes ago. Bouncing just a tiny bit. I think this yellow line is going to be very important. It's a new low for today. And below this line, which is 19,817, that's the important one. Below that, I think we can close below that today. And that's a new low for quite a while. What was it, 3 weeks or something? 1, 2, 3, 4, 5. 1, 2, 3, 4. 2 weeks and a day. Next, we have the YM daily data chart, Dow, and it has a sell signal a little too early, I'm sorry to say. But it is starting to make new lows for the last couple of weeks. That's today. And it is very close to making another new low that we only made an hour or two ago. All right, that's the YM. Russell, new lows yesterday and the day before, and it's just simply coming down better, faster, quicker than everything else, all the other indexes. Unfortunately, no sell signal on the top, but it did get overbought and in resistance. Next stop on the downside, probably in the ballpark of 2080. And I cannot rule out something down in the ballpark of 19, let's call it 2000. Yeah, 2000 will be fine. Next, Russell short-term data, new low today, made a lower low yesterday, made a new low the day before that. Now, I'm going to touch on bonds and notes. They are breaking out today of the head and shoulder top that I've had on my charts for a couple of days now. The symmetry is off a little bit. The last shoulder high, which was Tuesday of this week, was a little earlier than one would expect because of symmetry, but that's not abnormal. the symmetry on head and shoulder tops and bottoms is rarely exactly the same amount of days from left to right based on the middle being the head. But it should be fairly similar, say 10, 20% of the time frame, something like that. So if one of them was 100 days from the first shoulder to the head, then you might expect the last shoulder to be 80 to 120 days, for example, into the future after the head of the formation, which you don't even know is the head of the formation until we have some sort of a low that looks like a turning point to maybe make that last shoulder high. So that's the point right about there when you get suspicious that if there's a rally to a certain price and about a certain time, that could be a shoulder, and then bingo, we have a neckline. We have a downside breakout today on a closing basis if we stay here, and a new low for the move down. Classic. What usually happens now is you have one or two, maybe more, one or two more down days. In other words, a significant downside breakout, usually fairly large, big down days or a combination thereof. And then a bounce back toward the neckline, maybe 50% back up to the neckline, maybe all the way back up to the neckline. But the golden rule is you never close above the neckline. If you rally above it, you get worried. So stop at the neckline, please, and drop back down, or maybe just a halfway back up rally. Why is this significant? Because not only a head and shoulder top seems to have formed since the first shoulder high on August 23, so it's about oh, that's August. That's right. So it's about a month and a half. But you also have a top here on August 5th at about 27. Yeah, 20, almost exactly. Could be. So when we got up to 27 a couple of weeks ago, we did get somewhat higher up to 27.20. Do you consider this a double top? Yes or no? I think it's on the borderline of a double top. It's maybe a little bit too high for this second rally, but let's assume that you like it as a double top. So you take the average between the two highs, and I've got it right about there, and you measure down to the lowest low. Now you take that measurement and you drop it from the lowest low between the two tops, and you drop it straight down, and guess what? You get a downside objective at the lower end of my circle expectations, and the head and shoulder top formation has a downside objective in the upper part of my green circle. Wow. So we're heading down, and if one or the other or something between the two happens within the next 3 weeks, 4 weeks at the most, by the end of October, I will be one hell of a happy camper. Now that's bonds. Everything I just said, even a little bit more legitimately, except for the downside objective on the head and shoulder pattern, stands for notes, not quite the objective being in my circle. For notes, it's too high, but that certainly could be the minimum as it is, and we could drop down to the downside objective on the double top, which again is a little more accurate, a lot more accurate. The first high was almost matched to the tick when we ran. It doesn't have to be. This is plenty close enough. So we have a double top in notes. We're looking for a downside breakout, and that means you close below 113.03. Then the downside objective in my green circle applies. The downside objective on the head and shoulder will do that for me if I get that objective in the first place, which is 112.5-ish. So this formation should kick in a move starting today. That'll kick in a move to a greater downside objective, which is what I want in October. So far, so good, ladies and gentlemen. I'm kind of surprised it's working as well as it is. And I got this extra formation just appearing in the last 3 days. Next, crude oil. New high on the rally, not quite overbought. Large pennant formation should stop this rally somewhere up in here. I do not expect, frankly, the major bear trend line to be tested. Oh, that's possible. It's also a resistance area in a few days, so they're real close together. But we're probably going to get overbought on a small rally at this point because we're very close to it already. Yeah, it looks like my cursor, my horizontal line here 7630 could be reasonably important. 7630. Next chart. Overbought now for a couple of days. We have a doji inside day on the natural gas and approaching resistance. Plus, it's approaching. Oh, wait, that line is not where it's supposed to be. I'm not sure why I have that line in there. Let's just delete that. Okay. So my upside objective is right there, 3.11-ish. And we're going to have a new high close to move up, and maybe it'll pop up above yesterday's high, which was already the highest high since the bottom of a double bottom with a bullish engulfing ER buy signal smack dab on the low of the market. Two others following soon. So my upside objective at a minimum, because of the double bottom again, is 3.11-ish. Pretty much close to that major bear trend line. That's interesting. That's what I'm looking for. Maybe very fast. But the problem is we're getting just a teeny weeny overbought now, and that could stall it out a little. Next chart, heating oil. Big pop up today. Outside up day, bullish engulfing, but overbought, pretty much high and last, and now in a resistance area for heating oil. Now, it may not stop here. This is not a particularly super profound resistance area, but it's about the best we got. And considering the fact that it's in a long-term bear market, overbought and resistance could be a classic spot for it to stop rallying and turn right back down again. Keep your eyes on this very, very closely. Next is a little bit of a rally in gold. Now we're going to do gold, silver, platinum, copper, and beans, oil, meal, corn, wheat, cattle, and hogs. Now, gold, I was bearish for quite a bit, a little stubbornly so, and it popped out of this big sideways trading range in a classic bullish manner. I mentioned it at the time, but wasn't believing that that's exactly what it was. So we get follow through, we get overbought, we get a retracement back to support very accurately, frankly. We get a new high after that, get overbought again. This sounds exactly like bull markets are typically doing things. We had a little downside correction, and that was only 3 or 4 days ago. So now it's trying to hold on high and last about where it opened. And if it pops up a little bit more, it could have a new high close or second highest high close for the trend. That's not acting particularly bearish. So I'm not sure. I started fumbling around, not coming up with a great commentary here in gold. I'm going to have to pass on it. It just looks more bullish than I would like to say. What can I say? I guess I have to be bullish, but I don't want to be. I don't like the fact that it had overbought conditions. Simply because it's not going down a lot right away doesn't mean the overbought condition is still not going to produce more of a break. I'm not sure about this. And next chart is silver. Close to the same kind of comments, but silver's a little stronger, quicker. We're right now probably at a new high close and move up and very close to making those new highs also. What can I say? Silver's acting more bullish than I was expecting in general. I don't have an upside objective. We're already basically reaching it. I just don't have a bearish engulfing or a sell signal or some sort of bearish indication. Platinum. Back up to resistance and stopped. Pulled back. No big deal. So far, don't see anything particularly profound about this situation, except it tested resistance twice, actually 3 times, and it's pulled down out of it. But I got no lower lows over any significant amount of time. They still seem to be climbing. We do have a little bit more of the higher high scenario. I don't know. All 3 precious metals are baffling me a little bit at the moment. Copper. Great. Resold the top day in the copper market. Red bearish ER sell signal, period. We have a high today that's 1 tick below yesterday's high. If it went up 2 more ticks, if today's high was 2 ticks higher, and it's not, we would have a bearish red engulfing right now, because that would have provided us with an outside down day, bearish engulfing, and we are overbought even today. So red, but close doesn't count. So close, 2 ticks close. Nevertheless, new lows for 1, 2 days, not too far away from lower low on the signal day itself, which is good news when it happens. And I'm expecting a move down at a very bare minimum to 4.416 and probably down to 4.3 and a quarter, 4.325. Now I cannot rule out a move all the way back down to where we got a buy signal on the lowest low for the move, September 5, very bottom of the market to the day, bullish signal, huge move up, green dotted line represents the trade all the way up to the high day, and frankly in the at least the middle, if not a little above the middle of that big up day. And that's the reason why our stop moved up so fast during that day, because there was that big sharp rally. Our stop is not a moving average. It has nothing to do with moving averages. It has everything to do with the speed at which the markets move, and not only that, but time, especially the scalp trades have time calculations in it, as well as momentum, so to speak, and the way the market moves also. So I'm real happy about the way copper has provided some great signals on turning points lately. Next, we got beans. No sell signal on the highs. Very close outside up day. Now, I probably mentioned to you that on September 27th, I'd have to go back to listen to my own recording, that these outside up days in overbought conditions frequently are something I call bass-ackwards reversals. Bass-ackwards, meaning the reverse, of course. So I couldn't tell the day that this happened that it was going to be one of those signals, although I mentioned it. We so far have only come down a little bit for about 3-4 days now. But, hey, coming down. I'd like to start closing below the low of September 27th. That could start something more bearish. Long-term bear market, overbought conditions. I won't be surprised to find out a week or two from now that we're back down close to 1,000 I meant. So, bearish intermediate, bearish long-term, no signals, so a little bearish short-term also, just basically bearish. I think that may have been an important high. If it's not, then we're going to get overbought again, and we're going to probably pop up to about 1604, which I've been mentioning for a long time. Next chart. Oil has challenged the top of the market, which was the highest high for the move at the time. The high was 44.86. Today's high is 44.99. So just a tiny bit higher than that high over the last week. Maybe a minor double top, but we got to start going down right away. I don't want any more strength, and we're still near the high of the day. There's no sign of it turning yet. And we're not overbought. We were the first time we got up that high a week ago. Let's see what happens. I think there's a pretty good chance it'd start breaking down. Meal. Here's that bullish engulfing again in overbought condition. And hit yesterday, got below the low of the bass-ackwards engulfing in overbought condition on October 1st. That one is working very, very well, but it's not an official signal of mine, just something I've seen happen often enough over my decades of watching the market. Interesting. Next, corn. Yeah, it's still up here at resistance, kind of stopping yesterday and today, basically at the high 2 days ago on October 1st. At the top of a resistance area, pretty much at resistance. It just might start to roll over. If not, then the next upside is 446. And at the ultimate rally at the moment, because I just can't justify being bullish here very much for very long, maybe 464, and I kind of doubt that. Next, at resistance, overbought, closed yesterday, topped out about the same price today, again, turning down. So that's overbought at resistance, classic turn down. Maybe that's all she wrote. No bearish engulfing. Today's high is 617 and a quarter, while yesterday was exactly the same. So we have no outside down day because the two highs tick for tick were identical. If we had one tick higher today, we could have a lower low. We haven't yet. Then we would have a bearish signal and a red bar, but nope. Next. And I think it's turning down cattle. Higher high overbought than yesterday's high can have a bearish engulfing if it gets below yesterday's low. Doubt it. It's low. It's close to the low and last, but not quite. It seems like it has a little larger amount than I would expect to get down in order to get below yesterday's low, but it could do it. And it came up against resistance and stopped 2 days in a row. And it's now fulfilled my minimum upside objective, ladies and gentlemen. Yesterday, finally, for my double bottom formation, the upside breakout right here for the double bottom, and the minimum upside objective is now finished yesterday. Yay, it worked. Now will it top out and start to head south? Next, Miss Piggy at resistance. Excuse me. Turning down. Today's high 76.80. Yesterday's exactly the same. So now I'm all of a sudden a little suspicious that my data is correct. I'll have to figure that out later. So what I'm looking at does not appear to be a bearish engulfing or even the possibility thereof, just simply overbought, which I believe is correct and close to the resistance level. Okay. E-mini. We're bouncing some. I can't get overly excited about this little bounce. Bouncing just a little bit in the spider, don't really care. NASDAQ, bounced just a little bit. Again, I don't have any expectation that this would be important. If we do start making new highs for the session, that would change my mind a little bit, but not too much. Still looking for the reversals we have seen to be very important for the month of October. Lower levels coming. You guys have a great day. Profitable trading to you. Tomorrow, I'll show you these October low records.